Tyler Crow, we're basically right around all-time highs from the market broadly. And a lot of times that makes investors do one or two things, either run in with FOMO and buy, or step back and think about getting out of the market. But there's another alternative out there too. And that's something you and I've talked about before. If you turn over enough rocks, if you look around enough, you can find bargains in the market to buy just about any time. I've got a bargain stock that I want to talk about. I'm stealing it from a friend and colleague of ours, and I'm sure you have one too.
I am always finding something in the market that's actually worth buying. So there's always a bargain somewhere. You just got to look for it.
All right, that's Tyler Crow. I'm Jason Hall. This is Investing Unscripted. We're going to dig in here and talk about a couple of bargain stocks that we think it is time to buy them here as we get into September. Before we get into the details, though, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you should go to our special link. It's fool.com/unscripted, fool.com/unscripted. You can get access to The Motley Fool's 10 best stocks to buy right now. Go check that link out. You'll be glad you did. Tyler, I'm going to make the case for PayPal. I'm stealing that one from Jeff Santoro, my co-host on the podcast. I'll talk about that one in a minute, but you go first.
We'll go on Tyler's Obscure Stock Quarterly to start off here. But I'm going to
Weekly,
go,
quarterly, weekly.
yeah, in my case, it's actually daily if you were in my own head. I I want to go to the healthcare industry, and I want to talk about a company called LNTH Holdings. I think you and I have discussed this maybe once before, but LNTH Holdings, they make diagnostic assistance products for like imaging. So say you're doing a nuclear imaging scan, they're typically called PET scans. If you go in for them, they're things that kind of aid in the scanning to help detect things. It's an agent, typically a radioactive isotope that will bind to a certain protein or an antigen or something like that and help to kind of enhance the imaging so that the doctors can have a better idea of what's going on. It's pretty common in thyroid cancers and things like that. But most recently, the past couple of years, they discovered a new kind of isotope that was very good at detecting prostate cancer, and basically prostate cancer that had metastasized in the body beyond just the prostate. And it's been like a breakthrough drug for this company because it's been something that has been very hard to detect, very hard to screen for, and they seem to have figured it out. And it's becoming like the industry standard very, very fast for when you're doing screens for prostate cancer. It's been a very good detection device, and as a result, more and more uses are going along there. Even if they're just doing initial screens, they're starting to use it. On top of that, there was a major announcement this past quarter where typically this isotope is charged along with the cost of it is charged along with the actual imaging. But Medicare recently issued a ruling that says that they will pay for the diagnostic assistant, this nuclear isotope, separately from the PET scan, which is a huge uplift because it gives Lantheus a little bit of pricing power on this. So from a business, this has been a fantastic uplift. It's like quadrupled its earnings in the past couple of years, and it's expected to grow even more. And on top of that, they have this really interesting pipeline where they're taking this idea and applying it across a couple other ideas. They have they think they have found a new isotope for early detection of Alzheimer's. And also, they're starting to look at ways for some of these cancerous tumors that they're able to detect with this radioisotope, that they can now bind that with an actual drug that could treat the cancer. And so it's a way of delivering the drug in a much more efficient way. Yeah,
I have a question for you to wrap this one up. So
sure.
pulling up the stock chart and taking a look here, this is the past 5 years, and the stock has absolutely skyrocketed, of course, on the success of exactly what you're talking about. And again, if you look at it here more recently, it's down a little bit. It's down a little bit from the high. It's down 12 or 13% from the all-time high set recently, which we don't usually associate that with bargains. We look at it on a cash flows and an earnings basis, and it's trading for 17, 18 times earnings, around 21 times pre-cash flow. So you could make the case that maybe it's not super expensive, but what makes the bargain case here? To me, it sounds like it's just the pure ability from this price to be exceptionally more profitable than it is today.
And that's kind of the thing, is you're getting what I believe is a higher growth business at a very reasonable price to do so. Like I said, this Clarify is the name of the diagnostic imaging for prostate cancer. And they believe right now it's a $1 billion a year in revenue treatment or diagnostic agent for them. They believe by 2026 it's a $2 billion in revenue agent. And that doesn't include any potential on its pipeline from here, which, is a crapshoot. I'll admit that. But on the prostate diagnostic agent alone, I think there's still considerable upside, and which at that price seems very reasonable.
Okay, I'm going to make the case here for PayPal. So the best way to describe PayPal, essentially in its entire existence, Tyler, as a public company, as a standalone company from when it was spun out of eBay, is maybe kind of a disappointment. There was the big run up during the pandemic where so many other companies that were online, internet based companies, payments companies got pulled into this too, rocketed higher, but the stock is way, way down from those highs. And it's not a ton higher than it was, I guess, close to a decade ago at this point, from when it was spun out and it went public. The results were complicated by the slow separation from PayPal or from eBay with its business relationship, right? It doesn't process payments for eBay anymore as it moved away from that and added other and grew kind of its branded payments business, its checkout business, its processing business. And of course, now Venmo has been massively successful. But along the way, we saw it tried to be everything. I think they had the idea of this being one of these everything payments businesses. And they were really unfocused. They were trying to do too many things, and it really drug the bottom line down. Growth was diluted. They were growing users at a very high rate for a long time, but a lot of those users were just users on paper, but they weren't actually really using it. And this is what's brought it to my attention. So again, I'm going to give some credit here to my partner, Jeff Santoro, who's really been beating the drum for me on PayPal for close to a year now, saying, hey, I really think they're making progress. I have a new CEO that's in place. He's been there for a little while now. And really what they're focusing on, because if you look at the active accounts, so it's kind of a proxy for users, it's flat year over year. But part of that is because there's been a decent amount of churn. So they're purging accounts that used to be active, that really weren't active. So there is some growth, and you're starting to see that show up like in the monthly active accounts, where that number was up 3%. And then you're really starting to see it in engagement here. So transactions were up 8%. So 11% transactions per active account. So we're starting to see some traction with uptake from users who are using it more and more. And that's starting to really pay off on the top and the bottom line. So total payment volume was up 11%. So revenue was up 8%, 9% when you adjust for its out of US revenues and foreign exchange. And that really paid off on the bottom line. We saw 36% growth in adjusted earnings per share. Free cash flow and cash flows continue to be really solid, even as they focus on spending to maintain and strengthen the business. So there's some clear signs here that the things that the company has been trying to do and the priorities that its new management have set, they've set the bar low, and the company's kind of exceeded each quarter since their new CEOs come in. They've pretty consistently exceeded those results. And then you take that, again, this is a different case than the stock you were talking about, LNTH there, where this is really more of like a bargain play here. Does PayPal still have some growth potential? Yeah, it absolutely does. But this is an opportunity to buy what looks like a turnaround story that's really turning around at what I think is a really, really appealing price, because I think we're going to continue to see profitability improve. Margins are going to improve. And they're really focused on the products and the users in the markets where there's opportunity for the best profit. So I think that's a really powerful thing. So from a valuation perspective, looking at their trailing earnings, a little over 17 times earnings, again, not super cheap, but that's a pretty good price for a business that could get the kind of margins that we've seen from PayPal in the past, as they really lean out the business and lean into the parts of the business that are the best. Forward earnings, about 16 times. That's adjusted earnings, though. That's not GAAP, and the purple is GAAP, so that's important. But again, this is a business that's at scale. It's really cash generative. Trades for 11 times free cash flow, Tyler. I think that is exceptionally good value for a business like PayPal. And I think investors that are looking for deep value and really high quality business, I think it's de-risked a lot. The turnaround is working. We're seeing the turnaround, but it's still trading for a deep value for a lot of investors that don't believe the turnaround is really working, or that PayPal's future is that bright. 11 times cash flows, sign me up.